Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. By the chart, I'm sure you know what time it is, but this time around we are going to be doing candle by candle psychological analysis on the S&P 500, and we're going to be going candle by candle to really kind of understand what's going on in the underlying, right? What's happening from the psychological perspective? Are traders nervous? Are they strong? Are they freaked out right now? What's all going on in the grand scheme of things? And that's what the whole purpose of this really aims to do, is to look through from the start to around noon time or so, 11, 12 o'clock, and see what we can really discern from the underlying of these candles. So kicking things off right out of the gates, we have a pretty strong gap to the upside. And I mean, strong in the sense that they left that thing in the dust. Like, nowhere to be found is this gap anywhere near current price. It is opening up way up here. But notice, this is still an inside gap up, meaning that we haven't broken outside of the previous day's high or low. The previous day's high of low would be right here and here. So given the fact that we have an inside gap up, there's a pretty good likelihood, although it certainly doesn't feel like it way the heck up here, that the market will fill the gap. That's based off of long-term probability, of course. That is a heck of a long ways away, but that probability still sits there. And if we look back at where this market is opening up, we're opening up right at the base of previous support, but where did this first 5-minute bar close? Right at the top of yesterday's range. They didn't close above it, although they did try to challenge the highs. They closed back underneath it. That could potentially be a bit problematic. If we zoom in a little bit closer and we look, where's the first 5 minutes of volume coming in? Who has the dominant volume on this first portion? And it's right here. So as far as the first volume at 43.8250, that's the first 5-minute volume, and we have an inside gap up into resistance. It's got some obvious problems here. Realistically, it would make sense that the bulls are going to have either a very hard time getting through the top and they start reversing back down. I mean, maybe to fill settlement. That's a mile and a half down there, but at least to get back to another, maybe back down to the range lows again, 43.80s, 78s, something along those lines. If the bulls are able to follow this through with another really strong bull bar, then we might be on our way up to, 43.90s before you know it here, while the market is continuing. We've got a weak bear bar. Now, yikes, it closes above the first 5-minute POC. If we drag this a little bit further forward to gauge what happened in the first 10 minutes, the POC didn't move much, but down to 82 from 82.50. So a 2-tick move, really weak bear bar, and this isn't much of a surprise, right? We kind of expected the bulls to have a bit of a tough time here. I mean, they're going directly into resistance. It would make sense to see some trouble here and have the market pull back. A lot of traders will likely be looking to buy a little bit lower, or from a swing trader's perspective, possibly even selling up here, although that feels a little bit dangerous, trying to get the market to roll back over again. Now, the gap is way down there, and although it's not very likely that it's going to hit it today, there is a good chance that it will try to drive down there at some point over the next few days and finish the job off. So sellers will be taking a low probability but high reward shot and basically trying to get this to rotate down. I gotta say, it would be pretty nice to see them get underneath the POC and some of this other stuff here. That makes it a little bit more complicated. But, for right now, we've got a weak bull bar into a bear bar. They're kind of doing what we would expect them to do. So let's go to the next candle. There we go. Nice bear bar to the downside with a double top on the highs, rotating back down and closing underneath the first 5-minute volume node. If we go a little bit further forward and take a look at the first 15 minutes of volume to see what's going on, now we've got the volume POC up here. Uh-oh, wait a minute. We can see some problems. If the bulls were going to try to get this to go through, then we should have been above the POC. Why is the market closing underneath it? We've got some issues here. Again, a lot of traders will be looking at this from a low probability, high reward standpoint, knowing that they can short above the highs for rewards down about 2-to-1 or potentially more back to the lows of the first 5-minute bar. We already knew that there was going to be some weakness up here, and this extra bear bar definitely helps the case. A lot of sellers may even try to jump in underneath this bear bar to get a bit more conviction lower. Their objectives at a 0.5-to-1 would be at around 43.80, and then any wider than that, as an example, a 2-to-1 would be through the lows at 43.75 quarter. The shorts are triggered in. Wow, what a bear bar. Huge bear bar to the downside. And with this trigger in, this does take care of the scalpers. The scalpers got their objectives filled. The one-to-one traders, did they get hit too? Let's go one-to-one traders. Yep, they got filled as well. So the only other traders that are left are the 2-to-1s. And that is below the low. This is a fantastic bear bar to the downside. It hasn't challenged the lows of the first 5-minute bar yet. So that means that we've got a little bit of wiggle room. If this big bear bar would have dove down and hit the lows, or, come like one tick away from the low and then start closing a bit weaker, that might be a red flag. But this is a really strong bear bar to the downside. I don't think sellers are going to want to jump ship. Buyers may want to buy it as a washout, but putting it into context, why would they buy a washout when it's failing off of a previous swing high? That just doesn't make any sense. So there's more likelihood that the sellers will keep this going to the downside. Or pause. Nothing really happened. Actually, it just ended as a doji. Small gap from close to open into that candle, and it did close down as a doji. Realistically, we know that sellers are still in, and this offers up some potential candle gapping. If we look inside from the lows of the bear bar to the top of the doji, that is our gap, and we can use that distance to give us an objective to the downside as to where the market may want to try to reach out to. So if we're using that from the top of that bear bar to the doji, that puts a downside objective here at 75.50. Well, the 2-to-1 target is already down at 43.75. Chances are, if we get down to that point, we're probably going to see a bounce. I think that's a pretty safe bet. So if shorts are in, they're definitively going to be looking to take profit down here, because now we have multiple traders buying at the same place. They may be sellers taking profit, but either way, when there's an excess amount of buying, well, what do you expect to have happen? It's probably going to bounce. So shorts will look for their objective. Bulls on the scalp side may even look for a quick snapback to the upside. Fantastic drive down. They do get their objective. The 2-to-1 is complete. They close directly on top of all of those objectives down and stop dead in their tracks. Now, we haven't had a bounce back to the upside. The candle gapping is complete. We don't have any new candle gapping. But with all of these objectives, all of these targets, these 2-to-1s, these major swing gaps, candle gaps, all of these things coming together, telling us that the market should at least bounce here, it's more likely than anything that we get at least a bull bar or maybe another doji to pause and go a bit sideways here. It's a huge target zone. Okay, we do get a strong bull bar back up, although it is an inside bull bar. It's an inside bull bar because it did not break outside of the previous bear bar, right? It's stuck inside of it. So with an inside bar, that doesn't necessarily tell us anything. We're just kind of in consolidation, right? The market hasn't gone anywhere per se. If you were buying it as a scalper, that was a fantastic bounce. But outside of that, that's really about all they've got to work with. It's not proving that this is a low. It's also not proving that it's the bottom. We'll have to kind of wait and see. Fantastic. Another inside bar. Usually when you get an inside bar, when you got them stacked like that, they're attempting to get a breakout. The first breakout of these is usually going to be the attempt that they're going to try. With an inside, that means that they've consolidated so much that they're likely going to try to get the breakdown. Now, let's be realistic here. Where would a breakdown put the market? The breakdown would put the market right back into the target zone, which just proved itself. So if sellers were a little bit about taking targets there, they're going to be a lot less this time around. It's pretty obvious. We had a heck of a bounce off of that. And why wait the second time around unless they want to try to get greedy? Maybe it slides through. Chances are, though, given the weakness that we're seeing on this inside bar, if it does try to break and it tries to break lower first, it's more likely a trap that will reverse back up. If we see the bulls breaking above this bull bar and the inside bear bar, then we've got a good shot at least getting back up towards, the inside highs at around 43.81, maybe back to the first 15-minute node at 82.50. We get a weak bear bar trying to break back down, and what do you know? Where did they stop dead in their tracks? It's almost like we kind of knew that was going to happen there. A lot of traders are taking their profit. Sometimes traders, when they're in short, as an example, they don't want to be the first one to get out of their positions. How many times have you gotten out of a position just to realize that it goes another 3% without you, right? We've all been there. So what a lot of traders will do is they'll wait and see, is there a response at their target area? If there is, then they'll jump out the second time around. That does mean that they're risking giving the trade back. But noting that that bounce was so aggressive with an inside bar, another inside bar, and a breakout to the downside, if sellers are looking for downside objectives, they may try to get greedy here. But then they close a candle that looks like that. I think all of that greed dissipates. Like, nah, nope, just kidding. I'm not going to be greedy here. That doesn't make any sense. The market totally fell apart when it was supposed to get a breakdown. So seeing as the sellers are going to have a little bit of a tough time on the lows, we are already seeing that demonstrated in the wick here. It wouldn't be a surprise to see the buyers try to even buy above this bear bar. Maybe try to get a short-term little scalpers pop to the upside. There's no candle gapping. We're starting to see, what, 1, 2, 3, 4. Now this would be the fifth candle basically stacked on top of each other. Chances are we're more in a range, so trying to buy high for a move higher or sell low for a move lower is going to be challenging. We're a lot better off with the assumption that we're in the middle. If I'm going to take a long, as an example, above this bear bar, I would want to make sure that my target is right like this. This is a perfect example. Scalper's target is inside of that congestion. That's perfect. That's what they could operate with, but that's about the only thing really, aside from just giving it a little bit more time. Okay, the bulls do get their snap above that bear bar. They get the scalper's target. Still kind of in a range. You know, it hasn't really broken above the inside double top. We're not really breaking outside of the lows. And even if we're looking at the closes and opens, this is the first time that they've challenged it. So this may be important to see how they respond to this. The bulls finally got the jump. They triggered above a previous bear bar. It's only technically a first long. That's a bit awkward. So seeing how they respond to this will be very important. It's a bear bar back down. Great. Inside bear bar to make it even better. Now, we have to look at this in context, right? We just had this gigantic bear bar, inside bar, failed break lower, attempted move higher, no follow through whatsoever, and another inside bear bar. Yikes. What a mess, right? Now, if longs are going to take this, honestly, I would rather see it triggered down first, then go up for a bull engulfing bar just to add a bit more of a trap, right? We already know that sellers are possibly trapped on the lows. To add to that kind of conviction, that's the only way that I could really see going long, because we just closed above it and then immediately gave it back up again. That's a twin reversal. So seeing a twin reversal here with an inside bear bar, I know we just failed another bear bar breakdown, but where the heck are the bulls? Right? Why aren't they showing up to the party? I can't be the first one to the party. I've got to wait for more conviction. Because of that, some sellers may try to sell for a leg to the downside. And if we're looking at this from a bear leg, top to bottom, we do have downside objectives of the 382 inside the lows and the 618 just on the outside of it. So we've got some really logical targets back down here that a lot of sellers may utilize. Holy crap. All right, or all of them all at once. Hey, why not? Big objective to the downside. Obviously, they nailed a lot of targets. They hit the 382, they hit the 618, closed basically on top of it, and we are at a new low. The one thing that's standing out here a little bit further is now we've got the 2-to-1 objective, which is solidified. We saw the 2-to-1 traders exit, and now we're back down again. We're closing underneath it. Now, that doesn't mean that I'm going to sell here and hope that we get that giant dive to the downside, but realistically, you could see why a lot of sellers are starting to pick up some speed. There are some concerns. It's the first time we've tested the moving average after a huge gap to the upside. A lot of times the market will bounce there or at least go sideways and congest for a bit while it tries to figure out what it wants to do. But if we start cracking underneath this might very well be on its way down to that gap fill. All right, we get more weakness, we get more chop and slop. It did break down another new low, but it's basically nowheresville. Bear bar not proving a whole lot. Sellers may be trying to come in there, but looking left, this is where we're starting to see some previous support coming in. And seeing some weakness on the bear bar after this blow off, I mean, that's troublesome. The one caveat that we do have is there is a really big candle gap to the downside, which would be projecting downside objectives for the NASDAQ sitting right at about 43.69.75. So they're kind of re-upping their ability to go down a bit further. Little more continuation to the downside. Incredibly weak bear bar, and they couldn't quite reach out to fill that objective either. We don't have any new candle gapping, which is troublesome. That's showing that this bear movement is starting to fall apart a little bit. But along with that, we're also running back into that previous major congestion zone. There's some definite problems here. So with the shorts, if I were short, I would want to probably start easing off on the short. And if I weren't necessarily in a position yet, this is a nice ABCD corrective phase for bulls to try to get another ramp back up. It's low probability, but typically with that low probability, you're looking for the high reward versus risk. It would be really nice to see them fill that 1-to-1 move. We'll see. All right, bull bar back to the upside, really, really weak on the top of that bull bar. A lot of sellers may be thinking, you know what, I know that there's some candle gapping to the downside. I'm going to sell in the gap and try to defend it. And that would make a lot of sense because nobody wants to sell way the heck down here. So sellers very obviously starting to fill in the gap. They held it down. They even got the market to close underneath it. So sellers may be trying to take a crack at it. If we look at it from a volume perspective and creep this a little bit further forward to this bull bar, that will tell us that we are firmly under the POC, so the sellers still have every reason to believe that the market's going to continue down further. It's just nobody wants to sell down here, so they're trying to sell better prices. I tell you what would be a really nice price is a retest back up to that POC at 78.75 and then try to churn it back down. That would give all of those buyers who got stuck long earlier a chance to get out at break even, and shorts to potentially re-up their drive down with a very good risk reward, filling the gap back down here. At first it didn't look like it was very likely, but we're plotting some pretty heavy bull bars and bear bars here. It's becoming more and more likely that if the market does want to break down, they could reach out and fill that. And we've got to keep that kind of in perspective. All right, really big bull bar up. Okay. And very interesting that we're gapping not from the close to the open, but really strong lift to the upside, demonstrating that buyers may be trying to come in. If we look at this move from the top, we've got our first long and our second long. We know that buyers are in and they're looking for a continuation phase up. The concern is fairly obvious, though. We've got that giant POC just above the market at 43.7875. If I were going to be a buyer, there's no way I could ever do it here because I've got like one tick of room. It's just not going to work. From the seller's perspective, sellers will be able to sell here with the stop above the highs. We've been talking about that. And the 2-to-1 to the downside. So they've got a lot of potential to the downside. The upside, I mean, I want to find a reason for the buyers to have a shot here, but they're still under the POC. They can't even make it. So, I mean, seeing this gapping and everything, that's great, but they're going to have to roll back up and really show some proof here. Yikes, and that's not it. Basically, a to the tick test of the POC and a bear bar rejection back down. We do have some candle gapping to the upside still. Right? We've got this candle gap, which obviously is already closed, and then we've got the next one, which is right here, heading into a bear bar that might also quickly close. This may be seen as a second long failure for a continuation down, but I don't think really that the bulls are going to be super concerned yet. It is a bear bar. It's off the previous POC. That's a real bummer, but we do have this previous swing low that they just tried breaking out from underneath and then popped right back in. So as long as the bulls are maintaining this inside swing, they still have some reasoning. But if they start losing that, it's going to be kind of game over. It gets a lot more difficult. Oof. All right, another bear bar to the downside. The inside swing, make this a little thicker here. Too thick, a little thicker, there we go, is going to be the primary area of interest that the market still needs to hold on to. We have 2 consecutive bear bars. Now we've got the possibility of maybe 3 lower highs on the top that may be that drive down. There's some concerns. But remember, there's a giant gap too. This could also just be a really nice flag and a continuation up. So the bulls could very easily sweep this back to the upside and get this going. You just need a bit of extra proof. That's not it. That's terrible. That is a catastrophic failure from the bulls. Totally lost their grip underneath the lows. Big problem. Not only did they lose their grip on the lows, they closed the gap and they closed underneath it. And not only that, we also have downside candle gapping, which very likely was filled, but this is taking out a lot of the bullish context. The one saving grace that they do have is that they held the low closes and opens. That's it, right? There's not a whole lot left telling the bulls that they have a shot anymore, and sellers are definitely taking over. We already know that. We're under the POC. But seeing these big bear bars here does not help at all, and we're starting to get closer to lunchtime. Oh, man. Okay, another really nasty bear bar, and very important where it closed. It closed at the bottom, right? All the way at the... Now, do I want to sell here? No, absolutely not. Every time the market's been at the bottom, that's been the worst place to sell. But that does tell me that now we've got continuation down, and this isn't just an ABCD correction. If this were an ABCD correction, it should have gone back up to the highs. But it didn't. So the fact that we're rotating back down, holding underneath the POC, breaking underneath the previous swing, diminishing all of the bullish case, I have every reason to believe that if we can get bulls to pop back up, I definitely want to be looking for the short side. It makes a lot more sense now. Again, I don't want to be shorting down here. Look left. That should tell you enough, along with all the other things we talked about. So we just need a bit of a bounce. Okay, little bull bar. Weak bull bar, which is good. That would demonstrate kind of what we're looking for. We need some weakness here because I want to be selling into it. I want to look for the continuation down. The bulls are having a little bit of a hard time. Maybe they're trying to buy the low, but we've seen them fail so many times before that realistically, this is probably the beginning of an A to, a 1 to 2 wave into that third wave breakdown. We just haven't seen that yet. Okay, a little bull bar, micro double top, higher low, trying to get a continuation back up. There may be buyers above this. Let's look at this contextually though. Where are we, right? If I'm a buyer here and I'm buying this, where does my stop go? Pretty straightforward question, right? My stop would probably go underneath this low or way under here. Well, this is a pretty polarized scenario here. I'm either a swing trader or I'm a scalper, right? This is the only differences that we have right now. If this is swing trading territory, which we now know it is, that means that this long here above this top cannot be high probability. That is an impossibility. That cannot happen. So that means that this is a low probability long, and it's going to be difficult. So if I were to take this, I can't go for a scalper's target. I have to go for a 2 to 1. That fits. We're back up to the POC. So longs, they may take it. It's a really disgusting looking long, but they may take a shot at it, right? There's so many things saying that this should fall to the downside that a lot of traders may even choose to sell into these longs, selling up into that POC move to try to drop the market back down again. We get a bear bar back down. It did end up being a little bit of a trap on the top. And any bulls who did try to take that, they're not going to stick around for a stop a few more ticks down. They'll exit underneath that bear bar. Sellers know now what is going on. This is where things get really weird because you'll look at it and say, well, wait a minute. I didn't want to sell way down here. I didn't want to sell way down here. But now I'm talking like, well, wait a minute. I'm kind of okay selling here. What gives? What changed? Right, well, what changed is the simple fact that we had a POC that attempted to go long on the first long. The second long was nothing more than a break-even retest, and now that we dove underneath the lows, we just trapped in more bulls. So everybody who is on the wrong side are bulls, right? That's a perfect scenario for a breakdown and why a lot of traders will look to take that lower underneath that bear bar. And again, if I'm taking it short underneath this bear bar, what am I? Where does my stop go? My stop either goes above the bear bar, which, puts my target in the middle of no man's land if I'm a scalper. That fits because I'm taking a high probability, high risk, low reward. Now, on the other side of things, if I wanted to go back to a confirmed swing, which would be a bit more likely, the stop then technically would be up here by the POC. That's a little bit of a red flag, but that's the downside objective from a wider perspective, would be down to around 65.75. Either way, we're expecting somewhere, from here to about half of that. That's the downside move. And of course, we do have that close of the gap if they're able to really slam it. Oh, holy crap. All right. Giant slam to the downside. Huge bear bar. And now at this point, it's down to 43.6250. The gap close is at 59.25. Doesn't have very far to go. We are very likely going to have some serious candle gapping to the downside, and sellers, they're going to be looking for that continuation. Doesn't matter if they were a scalper here or if they were a 2 to 1. Either way, all of the objectives were hit, which is likely why we're seeing a bit of a bounce. Now, if this bounce stays small and can't get going, we'll probably see the secondary dive to fill the gap. If this jumps immediately back up, we're probably in V-bottom territory, and we're not going to hang out here for very long. All right, inside bear bar going into lunch, and we'll just finish it off since we're going into the lunchtime period now at 11:30. But the bears are looking for this inside bear bar and a continuation down, so long as it doesn't break back up, right? That's the important thing. Sellers are looking for a closure of the gap now. We had the stall. It didn't break back all the way up higher. It wasn't a huge twin reversal. Now they're just looking for a bit more. They're getting a little bit more. Nice bear bar. There's the closure of the gap. Major objective, Jumbotron wick. Right, this would tell us immediately if any shorts were in short still for whatever reason, if they weren't taking profit on the way down. Down at these lows, this just became a bit of a hot spot, right? Like, whoa, wait a minute, all of that wick down there, really? Why, right? What's going on down there? Are there that many people that are looking to take profit into the gap? So we've got to see, is there a volume shift? Is there a POC? It's still way up at the top. Getting a little more continuation, but you're seeing them have a hard time. These bear bars look really big, but look at the bodies. What are they able to accomplish? Not really much. They're not really going that far. Lots and lots of weakness, and notice where they're unable to close underneath major targets. If we look at it from a different perspective on this last swing, this is also a 1618 projection. We just had a video about these, right? Major zone of potential support, or at least an area where sellers are going to be taking profit. So I have to be incredibly careful down here. I do not want to short anymore, that's for sure. And if I am going to short, it's got to be way the heck back here, right? So give me some better prices. Down here, I'm thinking swing longs. I'm thinking, sellers are jumping ship. Buyers are starting to take over. All we need is a bit more proof. We drag this a little bit further forward. Another nice bear bar. They're still trying to get the momentum. Nice little micro double bottom. A little more continuation. Really bad continuation. Whoa, okay, holy crap. Giant bull bar back to the upside. So put yourself in the shoes of a short. If you were short and you didn't take your profit down here with literally everybody else, what are you thinking now? Crap. Right? That's what I'm thinking. I'm thinking, oh no, did I just mess up? We're back to the 2-to-1 target. Maybe I should just axe it here and just say, it's a 2-to-1. I can't get too mad at myself for taking a 2-to-1. So a lot of traders will jump ship on this candle. And bulls, talking about that V bottom, we just got a major completion of a target. We filled the gap. And we hit a major seller's objective. And we hit a downside 2-to-1. And we hit a gap fill. And we hit the previous swing low. I mean, stack them up, right? This is the spot. Swing longs will be looking for continuation off of this, and that's what they're going to try to do. Sellers know that, so if it does come back down to the lows, they're likely just going to jump ship, and we'll get a secondary bounce. And we'll kind of wrap this up and keep it going. Look at the follow through. Wow. So very, very interesting day, even with all of this herky-jerky back and forth stuff. Looking for these major prime hot spot zones of interest is where you can really find a lot of benefit. So hopefully you found this one interesting, useful, entertaining. As per the usual, if you have any questions, feel free to drop those down in the comment section below. Or if you want a more detailed question to get answered, shoot those in via email, jhb@ssftg.com. Otherwise, I hope you enjoyed it. And until the next one, we'll talk to y'all then, all right? Have a good one. Thanks again, and we'll talk to you later. Thanks.